we are recording. There we go. All right. Welcome today to this virtual webinar. My name is Caleb Talley. I'm the Director of Marketing and Events for Startup Junkie. For those of you who may be new to Startup Junkie, I see familiar faces, so you're already familiar with Startup Junkie, but I'm going to tell you anyway. We're a mission-driven organization based in Northwest Arkansas that exists to support and empower entrepreneurs, small business owners, innovators, anybody with an idea, or all the way to a company with millions of dollars in revenue. We're here to help and support, do no-cost consulting, workshops, events, lunch and learns, things just like this. So we thank you so much for being with us today. I am honored to introduce our guest speaker today, Richard Rogers. He's the CEO of Dannah Investment Group. Dannah Investment Group focuses on tax, investment, and insurance strategies. Richard has degrees in both accounting and computer science from Azusa Pacific University. He began his career in the audit department of the Los Angeles office of Pete Marwick. He was an adjunct professor at Azusa Pacific University teaching auditing, senior level accounting class for 7 years, and many of those students are now partners of CPA firms across the country. He's worked in the last 26 years for some of the top automotive groups in the country, including Penske Auto Group, Galpin Motors as a controller, CFO, COO, general manager, vice president, shareholder. He has experience with over 30 buys and sales, mergers and acquisitions, and he's managed cash investment up to $100 million and helped individual organizations increase their working capital by over $24 million. He is founded and is the president of CMF International as a qualified 501c3 that supports missionaries around the world. He's also on the board of directors of Auto Resource Network, as well as local school and church boards. So without further ado, I will turn it over to you, Mr. Richard Rogers.
Well, thank you, Caleb. I greatly appreciate that. And today we're going to talk about research and development tax credits. Which sound very exciting to most people, but for me, it's an opportunity that a lot of small businesses do not take advantage of for many different reasons that we're going to talk about today. So thank you for spending a little bit of time, and thank you for allowing me to talk to everybody. So I apologize in advance. My camera is in front of me, but my screen is to the right. So if I look to the right, unfortunately there may be a glare that you get off the top of my head. So I apologize for that in advance. But let's move forward on this. Slide 2. This is the disclaimer. Since I am securities licensed, we are not offering any investment advice today. This is for informational purposes only. If you do want to talk about something that is investment related, that would be a separate engagement. But today we are offering education only. So, research and development credits. Research and development credits are a tax credit that is offered to businesses that originated really back in 1981. And it was started by Ford Motor Company, who wanted to outsource research and development of vehicles overseas. The government wanted to keep those jobs in the United States, and so they created these research and development credits to keep those jobs in the United States. In about 2002, the definition of a research and development credit changed from something that is new to the world, like a new vehicle that's created for the public, to something that's possibly new to the company, something that is a new development. And we'll talk specifically about what qualifies and what doesn't qualify. But the bottom line is the definition changed in early 2000s. This was a huge benefit to businesses, but many businesses were not taking advantage of these credits. In 2015, the PATH Act made it a permanent part of the tax code. And in 2016, it really should have been a huge boom to businesses. Unfortunately, many businesses did not take advantage of these credits, and they just went unused. You can see there at 03, it says over 89% of these credits go unclaimed because mostly business owners don't know how to claim them. And that's partly because it's fairly confusing as to what qualifies and what doesn't qualify. So research and development credits, that it really applies to expenses that are done on U.S. soil. So again, the entire goal of a research and development credit is to keep jobs in the U.S. and to keep them here in the U.S. So, what is a QRA? So a QRA is a qualified research activity. In other words, what is it that we can claim a credit for that we may be doing as a business? So things that are available for a credit are things like manufacturing a product. You can imagine the money that Pfizer and that the pharmaceuticals are getting for creating the vaccine that has been going on. Developing a new or improved process, product, or formula. So instead of creating something new, we could get a credit for creating a new process. Obviously, research aimed at discovering new knowledge, experimenting with new material, testing involved to improve, alter, or make more efficient, or paying an outside consultant to do one of the things that are above. So you may be thinking, well, I don't know that I do any of these things. I may be a roofing company. I don't necessarily manufacture a new product, but the reality is that you do create a roof, and everybody's roof is typically different than other roofs. There's different pitches, there's different different applications, and surprisingly, roofing companies are one of the large beneficiaries of this tax law. That's what qualified research activities are. Here's an article from Forbes back in 2019, why Amazon pays no corporate taxes. And if you go to the second paragraph there, it says Amazon's financial statements show that the company received $419 million in tax credits for 2018, most of which were in the form of research and development credits. But you may be thinking, well, Amazon is not a pharmaceutical. They don't create drugs. They don't create software like a software company. But they did create new methods of producing and providing materials, which is the stuff that unfortunately shows up at our house almost every day. So Amazon qualified for substantial amounts of research and development credits. We'll talk a little bit why they qualified. But first, most people will think that, well, research and development credits really don't apply to me because I have a small business, and that's absolutely not true. They can apply to small businesses. The reality is that many people think the credit's only for people that are inventing something new. As you saw a couple slides ago, it's not just something new, but it could be an improved process. It may be a new way of doing something different. I have a dentist client that created a new InvisiShield, something that they do with their teeth so that it can help align their client's teeth. Aligning your teeth is not something new, but the way that they do that is different and it's new. Research and development is only for companies with labs and test tubes, like pharmaceutical companies. Absolutely not true. We've talked about that. The research and development is not for companies in my industry. I actually have a slide a couple ahead of us that will list many of the industries that research and development credits are applicable in. Research R&D is only for big companies. That is also not true. It works actually better for smaller businesses than it does for larger businesses because the criteria is easier for a company under 50 million than it is for one over 50 million. R&D won't help me with my state taxes. That's also not true. Many states allow you to claim a research and development credit in the state. In fact, many of the states allow you to go back 4 years instead of going back 3 years in order to apply for those credits. R&D won't help my bottom line. Well, the reality is that if I gave you $5,000, or you sold a product, and that product had a gross profit of $5,000, will that help your bottom line? Absolutely it will. So the reality is that any money that you can get back from your taxes is going to help your bottom line. And is it all too good to be true? Well, the reality is that it's not, and we have many clients that apply for these credits. The other big question is that many people believe that my CPA does this, right? And the reality is that most CPAs don't do research and development credits on their own. Many of the larger CPA firms do research and development credits, the mid-size and the national firms. They have departments that actually do research and development credits, but most of them do them for large companies, companies that are, may have a contract with them for, say, $50,000 or up. And so they do research and development credits, but most, mid to, small to mid-sized businesses, their CPAs don't do that. And the reason that they don't do that is because there's 5 million words in the tax code, and nobody can be an expert at all things. So the example that we like to give is, there's a lot of physicians in the world, but if you need heart surgery, you're not going to go to your general practitioner. Your general practitioner is going to refer you to a heart surgeon. The same thing in the legal world. If you need somebody that is a contract attorney, you're not going to use them if you're going to court and you need a trial attorney. Research and development credits are done by CPAs that primarily that is what their primary business is. So I wouldn't assume that your CPA does R&D credits. So who qualifies for these credits? What types of industries? We talked about pharmaceuticals. We talked about software companies. But as you look through this list, your business may or may not be on this list. But the reality is that most of these people on this list do something that either creates something new, creates some kind of an improved process, or does something that's going to qualify. And these are all industries that have not only qualified, but have applied for and received R&D credits. Here's a couple of examples of the larger clients that we have seen. Commercial contractor received $172,000. Auto dealer here in Dallas received $118,000. Some larger ones in agricultural, a dentist that we talked about a little bit. Dentist received $148,000. Just to give you an indication of the size of the credits that can be available. There's an independent repair shop with 8 employees in Pennsylvania. All mechanic services are performed by ASE certified technicians, use the latest specialized tools and diagnostics. The bottom line, this is a small business, 8 employees, but yet they applied for and received $54,873 in credits. This is another small business in Idaho. Again, this is an independent repair shop. 9 employees for a 3-year period, received $32,000. Here's another one that received $18,000. The reality is, like I said, if somebody wanted to give me $5,000, I'd be thrilled to death to receive a small credit back. So what is the process? The process is the first year you can go back 3 years in all states, and some states allow you to go back 4 years. You go back and you will complete a business qualification form. That form, not necessarily you have to complete it, but a form needs to be completed. That form is going to identify all of the different methods or the different ideas that may qualify for the 4-part test that we need in order to qualify for a qualified research activity. Once we've done that, we'll come back and we will do a projected credit analysis. The projected credit analysis is basically just saying, okay, for the work that you did, we believe, and we'll put our name on it, we believe that you will receive back X dollars for this year. And you can decide, is it worth it to you to go ahead and do that work or not. If you want to go forward, we prepare the paperwork and we move forward. at that point in time, then we will do the tax returns to apply for the credit. We'll need to amend your tax return in order to actually get the credit, and we'll go forward. So once we've done the estimate, it typically takes us about 15 to 18 business days, and we will give you a range of credits, like we said. If you want to go forward, that's the point in time that there's a commitment, we do paperwork, and there's agreement. You can tell that up until that time, we're giving you all the information that you need before you have to sign anything or before there's any kind of commitment. So once that's submitted to us, then that's when the tax work actually begins. So the question a lot of people will ask is, okay, so what does this cost, right? The answer is there's no cost to produce the projected credit analysis. Why do we do that? Because we want to be completely upfront as to what you're going to receive, what you're going to get, and what that cost is. If you decide to go forward, it's 33% of the amount of the credit received and 50% due at the start of the process. There's a couple different ways to calculate these credits. This is the most common way that we use. So with that, this is my contact info. Caleb, do we want to open it up for questions, or is there any other information that I can provide? I did that fairly quickly. I did that about 20 minutes, and I want to be respectful of everybody's time.
Yeah, that was great, Richard. So I will open the floor up to questions. I did get a note from Walter, who is with the AEDC. He mentioned qualifying for federal R&D credits. Also qualifies you for Arkansas State R&D tax credits. They're administered via the Science and Technology Board within the AEDC.
Mm-hmm. Yes.
So I will open it up for questions.
Hey, Walter, because that was a question that I was going to ask Richard as far as like the state tax credits and versus the federal tax credits. Could you give just a little information about what AEDC offers with the state tax credits?
Yeah, so AEDC offers a couple of different R&D tax credits. Companies younger than 5 years have a little better advantage there. Companies older than 5 years have a little smaller advantage. One of the things that the state offers is the ability to sell that tax credit. And those can generally be converted into cash for about 85 cents on the dollar. So a large company can buy that tax credit and apply it to their taxes while giving the small business cash flow. My question is, does the federal tax program add any similar feature?
I don't know that the federal, that's a question for me, I'm assuming. Yeah, I don't know that the federal tax credit is going to offer that type of feature at all. The credit is applied to your personal tax return. So your personal tax returns are amended, and you actually receive a check back from your personal tax return.
So personal only if it's an LLC or an S corp, but a C corp would go back to the corporation.
It would go back to the corporation, correct?
Okay. So this is a real advantage for startups. So since Conductor and Startup Junkie are linked, I'll mention this is a real advantage for startups and technology companies.
Telephone.
Yeah, sorry about that.
It's okay.
They were going to pick that up.
And then
No,
Walter,
that's great to know in Arkansas.
Yeah.
Walter, do you know what are some of the things that Richard said as far as like what qualifies for the R&D tax credits for federal? Is that the same for state, or is it different of what qualifies?
Yeah. Once you're qualified for the federal, you automatically qualify for the state. All you have to do is jump through a couple of hoops and fill out the forms. Okay. There's no additional qualifications for the state. The federal, once you're there for both federal and state.
Okay.
One of the things we probably should clarify is how much or how the credit is calculated. And so if you have a qualified research activity that, say, is $100,000, you've got somebody that has an employee and a W-2 wage of $100,000, and they're 100% qualified as a qualified research activity, you don't get 100% of their wages as a credit. We will use the alternative simplified crediting method that allows us to use percentages so that we can rely on estimates, we can rely on statistical samples, and the reality is the amount of the credit is going to range from anywhere from 5 to 10% of that actual qualified research activity. So the size of the business and the amount of the expense is going to determine how much credit you're going to receive back. So I've had software companies that tell me that, well, I've spent $1 million on this project. I'm thinking I'm going to get $1 million back, and that's not true. They're going to get 5 to 10% of that credit back, depending on what those expenses are, which is still a $50,000 to $100,000 credit. But I want to make sure that I set reasonable expectations when we talk about the credits.
On the state side, I think that's somewhere between 20 and 33%. So just
Of the state amount?
Of the state would give a credit that's 20 to 33%.
Yeah.
Is that of the expense or of what you got back from the feds?
Good morning, Abby. It's yeah, I think you and I qualify. But yeah, Abby and I are about 3 miles apart right now. If I have $100,000 engineer, my understanding is that I could get 20 to 33% of that $100,000 from my engineer back after qualifying for the federal.
So if the engineer qualifies as a qualified research activity,
yes,
and truly 100% of their time is doing that activity, then absolutely.
Okay, so let me run a scenario by you. Let's say I'm a company and I develop a new SaaS application, a new SaaS product that I'm going to offer to my customers, and I hire some contractors to do that. Is that the kind of developing a new product like that? Is that kind of activity that might be covered?
Yes, it potentially it can. I mean, I don't want to commit without knowing more of the information, but if you're creating a SaaS product and you're selling that to the public, the W-2 wages of employees that are in the United States can qualify for the credit. If you're using a third party, independent contractors, typically up to 65% of the amount that you pay them is going to qualify for the credit. So if you're paying them, let me pick a number. If you're paying them $100,000, that would be 65% of $100,000 or 65,000 times from 5 to 10% of that amount. So it'd be $6,500 for federal plus the state credit.
Yeah, I feel like you and I should become best friends, and you can help me in my sales process now. A lot of the work we do is helping businesses modernize their technology stack, and for some of those clients, it can be a significant investment, and the utilization of a whole lot of new technology, and they're very unique, things that it is innovation in its own way. So that's why if they could get a tax credit for 60% of our costs to them. Or at least if they could use that number to base the calculation, right? Even if they only get 5 or 10% back of that number.
Correct.
Yeah. Okay.
Yeah, it's still money back. I mean, it's not 100% of what they paid, but it's still money that they should be receiving back as credit.
Oh yeah. Well, the CFOs at some of these places, I can tell you, they'd love this idea.
Great. I'd be happy to help, and you can see my email here is on the screen, and my contact phone number is on the screen.
And
Any other questions?
I've got one more question for both the federal and the state tax credits. Like, does the federal last the lifespan of the company, or is there like you can only do the federal tax credits for like 5 years or 10 years? For federal and for state, is there a cutoff?
Yeah, so the cutoff for federal is that we can go back 3 years before you file this year's tax return. So if you haven't filed 2020 yet, we can still go back and amend, 19, 18, and 17.
Mhm.
So the first year you get a 3-year look back on the credit. So it's going to be 3 times the amount of what the normal credit would be. State is dependent on the state. It's either 3 or 4 years. And honestly, I'm not sure what Arkansas is. I'd have to look that up. But the first year you can go back 3 years.
Okay.
Once you file this year's tax return, then you would apply for 20, and if you've already done the 20 tax return, then you can have 20, 19, and 18.
Okay.
But the process is that you would want to file your tax return, and then you want to file for your research development credit. And here's the reason: you want your tax return to stand on its own. Turn it into the IRS, because nothing on your tax return has been reviewed by the IRS until you send it to them. When you send in an R&D credit tax return and amend your tax return, the IRS is going to review that. They're going to look at it. They're going to look at what the adjustment is, and then they're going to send you the money back. So in essence, I can't say that it is audited up front, but the reality is that they're going to review it before they send you the money. That's the reason that there are so few audits of R&D tax returns, is because the IRS is looking at those as they're amended.
Mhm.
And so so the process is that you'd want to file your tax return and then amend it, if that makes sense.
Yeah. And then after that first year, can you continue to file an R&D tax return after that?
Yep,
Yeah.
absolutely. Yep. After the first year, then it just becomes a reoccurring engagement.
Okay. Well, is that the same as for the state, Walter?
Yes.
I'm sorry.
Should be,
Like
Walter.
for Walter, for the state tax credits that ADC offers, is that the same as like you apply the first year and then you can continue to apply over and over again, or is there a cutoff?
Yeah, and I'm not speaking as an official state employee, but my understanding is that you can continue to file that for that tax credit for indefinite period of time.
Okay.
And do you know if Arkansas allows you to go back 4 years in the first year, or is it a 3-year state?
I was just looking that up. It looks like it's 3 years.
Okay. But 3 years is still substantial.
Yeah, I mean, I'm sure Abby and I spend hundreds of thousands of dollars on software coders and engineers per year, so it can add up pretty quick.
I've got one more question, Richard, because one of the slides that
Sure.
it interested me. You said that one of the companies or organizations, it was a real estate agency that got
Yes.
like 800,000 in tax credits.
Yes.
Do you know like what did
How did they do that?
Yeah, how did they do that?
Yeah, so they developed software that they used internally to improve their processes
Gotcha.
and improve how they look at their inventory, basically.
Gotcha.
That was a nationwide real estate agency, and obviously I can't say who that is,
Yeah.
but and
That
it was
makes
a very,
sense.
very large company. So if you take the number that they got, you divide that by 10%, you can imagine how much they spent
Yeah.
in order to develop
get
that
that.
software.
Yeah.
But the point of this slide is that there are multiple industries that do apply and do have the credits. It just depends on what the organization is doing and how creative they are on developing things that are new.
Mm-hmm.
Any more questions? Well, if not, Richard, I'd like to thank you on behalf of Startup Junkie for taking the time today to bring this presentation. It was valuable, and it will be shared widely with everybody that did register, and will live on our Facebook as well for those that want to go back and review it. Forgot what I was going to say. I'm going to, excuse me, when I send out that link, the YouTube link to everybody, I'll copy you in that email if that's okay with you, so that everybody has an easy way to reach out to you if that's all right.
That sounds great. Thank you. Thank you
Awesome.
for inviting me.
Absolutely. Everybody have a great day.
Thank you.